better than the rest of options. But even I don't believe the moment I generalize the whole country. If I look at other markets, the other regional markets, tier 2, tier 3 markets, definitely that's not the answer. And in any market, you will have one or two of these properties. Since you're talking about real estate, a couple of these assets, a couple of these properties which will definitely perform better than the averages. But weighted average of real estate property price appreciation does not give you much comfort. So as I said, I would not buy a housing property unless I'm sure in the next 5 years it's going to double up. And very few options available today.
Rohit Raj Modi, would you agree that even at these beaten down prices and a market where, if not beaten down, a market which hasn't gone anywhere on prices for the last 18 months, there aren't too many buys which will double up in the next 5 years? It's a big challenge thrown for the real estate sector.
You know, I think if we look at the statistics will bear it out that from 1980 to 2014, inflation-adjusted return on stocks and equities in India has been just 17.31%. Whereas if you look at real estate in the same period of last 34 years, we are talking about several times more, not few basis points, but several times more. So I think on a long term, real estate outstrips shares and equities, that has, in Indian context at least, and has been doing that in the last 25 to 30 years. And that's a factual situation.
Harshroongta, is that correct? I mean, that real estate has been outstripping. Okay, let's not take pan-India, let's not take tier 2, tier 3 cities. Let's take India's top 10 performing markets. Mumbai, where you live, is one of them, where people have made a huge amount of money. Gurgaon is the other one, where investments have actually been very, very prolific for many investors. Do you think that real estate actually outweighs, especially in India, the stock market returns?
Well, I would very much like to see the data based on which Mr. Modi is asserting that real estate has performed several times that of equity. I can't really think of any source of Indian data that says that. In fact, whatever data that we have seems to suggest exactly the reverse. I just actually want to take 2 or 3 points that you just brushed up. One, I think great thing that you did, Manisha, was to narrow down what you meant by real estate. You know, so that real estate means residential real estate in the context of a retail investor. I would like to say, please narrow it down further. Even within that segment, there are two parts. One part is what I call lending to the developer segment, and another is true residential real estate. Lending to the developer segment obviously should give you high return. It is hugely risky. I mean, no, we don't really, I mean, there are no laws that protect the consumer. Delays are rife. If I don't get a good return in underbooking property, in which other asset class will I get it?
Okay.
In fact, some interesting studies have been done that the return during the construction phase is higher, and ironically that is touted as a reason why you should invest in real estate. But moment the property is ready, post that, of course, it returns its asset class. It returns to the real asset class, which is residential real estate. There you do have some data, and I think that data seems to suggest that over long periods of time, over 10 years or more, the average return from real estate very, very clearly struggles to even come to about double digits. So I think very clearly, if you really define what real estate is, I think that will be an issue. The other thing that I think we should look at, you mentioned about shelter. So for it to be a shelter, you need asset classes that act differently. Gold is a shelter to to equity, because if you look at the past data, whenever equities haven't done well, gold has done well. Now that's not really true of real estate. I mean, typically, as somebody suggested in the panel, real estate adds with a lag. It acts with a lag after equities. So I don't think it can be a shelter. I think like any other asset class, residential real estate or generally real estate as an asset class is should be a part of portfolios. I just happen to believe that it should not be part of retail portfolios. I mean, retail portfolios can barely afford such lumpy investments that are so illiquid. That really was the point.
But Harsh, the surprising fact is that something's also wrong with our stock markets, and let's all accept that as well. No, let me make this point, Samir, and of course you can. I'm sure everyone has many ideas about this. Something's wrong. The retail investor you're talking about, Harsh, still wants real estate, right? The hard asset, and not going to the market. So there is a huge dichotomy on what is really good for the retail investor or will multiply his wealth, and what is it that he feels safe and secure with, despite the fact that you have a whole lot of developers there who probably have not delivered in time and the home buyers waiting. So why is that happening? I mean, Samir, come in here. I know you wanted to make a point, but keeping all arguments aside, over 50% of savings do go into the real estate sector. Why is there such a comfort with real estate even now in India? What has gone wrong with stock markets?
So, Manisha,
reverse the question.
I'll answer that. I actually have my portfolio divided 50% in real estate and 50% in equities. So I can fairly, and I've been in equities, guys, as much as I'm a real estate person. First, to answer Rohit's point, Rohit makes many times returns because he's a developer. So he buys agricultural land and multiplies it manyfold because of the licensing change. Otherwise, when you talk about the IRR return, Gurgaon and Delhi only have returned, and I've done a lot of work in this, is returned 18% and not adjusted to inflation returns over the last 25-30 years, and Noida is much lower, and so is Mumbai. So that's to answer how much real estate for a retail investor makes money.
Why is 18% low? 18% is a big number.
Not adjusted to inflation.
No,
and
even
that's why.
stock markets,
So I'm
you get
coming
15,
to answer,
16%.
and that's why I'm answering your question. That why do people love retail real estate? Why do retail people love real estate? The answer to your question is, first of all, stock markets are not easy to understand, very complicated, and most of the retail investors have lost money and never made any return unless they've gone through the SI monthly income investing route, or they've depended on the fund managers. Individual investing is super risky. They do not get it.
Okay.
As far as real estate investing is concerned, you don't have to be a scientist or understand the dynamics. It's only happened last 2 years where markets are really wanting you to understand the dynamics if you want to make money. Before that, you know, India was a map. You had a dart. You could put your dart anywhere on India and you'd make a return. And that's what the people in India are used to. They are used to making capital appreciation on their residential assets, and they made it all across the country. And that's why they have this fixation for buying more real estate. It's safer, easier to understand, and I know it's illiquid, but at least you have an asset that you can sell. In the stock markets, if you invest 10 lakh rupees, it could also become zero. That never happens in the real estate markets at all.
Okay, Amrish, now so let me come back to you, and you've been hearing the conversations. Okay, let's be very clear that both are needed in the portfolio, and I think if you as a retail investor also can afford both, why not? Would you agree with that? Or would you say that only after you've reached a HNI level, or the really HNIs would be the rich of India, is when you should look at real estate as an investment?
Real estate as an investment for a retail investor, I think that should come only after equities because of the amount of capital which is required. But then, I mean, investment into real estate as a home, the first home, yes, I think that's a must, and that should possibly happen even before equity. So there are two different types of investments in real estate. One is for home and one is as an investment. So that way I'm quite clear that that should happen only after your equity investment. But regarding the other discussion which was happening as far as the returns from real estate, I think it is the recent memory which actually plays out, because if you talk about gold, I think, up to 2013, everyone wanted to invest in gold. Today, no one really wants to look at gold in a major way, because after that, it was the equity which performed. So similarly, real estate, whoever had invested between 2004 to 2011-12 really multiplied his money. But that really may not happen going ahead, at least in the near future, because clearly we are seeing that correction. And even after that, I doubt whether like real estate can give 100% returns in 3-4 years. Even in the visible future, even if you're talking up to the 2016, 2017, I doubt whether like real estate anywhere can give that sort of a return.
Amrish, you're saying that stock